Hey folks, and welcome to Money Me. So every week I want to at least do one video talking about, if you've been following me lately, and I'm making more videos, and I said buyer beware on Roaring Kitty's GameStop, and today, and we're not going to talk much about it, but GameStop was down 12%, and the dreaded PayPal stock continues to slide. And I said probably we were looking at 61 as a bottom. It closed today at $60.13. So I subscribe to Value Line. I used to get it years ago, and I've been looking to get back into reading it because I'm always looking for opportunities. And there's certain stocks that are always going to be mentioned on CNBC, and that's not where you need to do your homework online. You need to watch videos like this, and you need to get some thoughts about really what opportunities exist out there in the stock market. Now, this channel is not going to always just be about the stock market. It's about money. When I created this channel, I wanted to basically use my experience of being in business, being a landlord, buying and selling real estate, buying and selling stocks, options, being a franchise owner in the past, to really cover all things money. And some of those names were taken. And, you know, really when it starts with your money, it starts with you, me. And sometimes you need to look at you, meaning me, where to, look for those opportunities and kind of change the way that you think about money to, now, we all make mistakes and we do things that screw up our money, and we'll talk about more of that stuff in the future in the videos. But guys, if you could do me a favor, watch the video and like and subscribe to the channel. We are getting closer to 500. But this packet came in today, Value Line, and I like it because you get these updates. There's 600 stocks. I subscribe to the Value Line 600, and one of the stocks that is featured in the edition of July 2024, and it falls under medical services, is Walgreens. And Walgreens has taken a beating. Walgreens is it still in the Dow? I think it is. Who knows? Things change so fast, and I do apologize. And I make some of these videos off the cuff, so maybe it's. Let me check. Is Walgreens still? Check. Is Walgreens still a Dow component? Let me see. I got two screens going here. Yes, Walgreens has been a Dow component since 20. Oh, no! Whoa! I just realized it was since 2018. It replaced GE, but no, Walgreens was removed from the Dow Jones Industrial Average on February 26, 2020, and replaced by Amazon. Wow! Yeah, basically the reasons they removed the stock was underperforming, and that's why too you get the Dow up at 40,000, because they adjust it to kind of artificially make it look like it's going up because they want strong companies in there. So nope, Walgreens is not part. One thing is, Walgreens is near its 52-week low. Its 52-week low is 1462. And its 52-week high is 32.89. I mean, so that stock is down about roughly 57%. The stock today closed at $15.15. The date I'm recording this in June, and it's just been terrible. The 52-week high actually was 19. Is that right? 1913 was 48. It was up that high. Yeah, I mean it's just really 20. Yeah, 19 and change. Yeah, I mean this stock was down in here in 1961, and yeah, even last December 26. Full disclosure, someone in our family does own some of the shares, and I think we're in around. If I had to guess, probably around 19. So we're down. We're down $4. The market cap on this stock is $13. I'm surprised the hedge fund hasn't stepped in. And you can go back to this stock being $48 2 years ago. and it held in that $40 to $48 range. Now it did bottom in COVID year at 27.61 and shot up to 48, and that's because honestly with the COVID test they were doing artificially good, but wow, Walgreens has been nothing but, I mean, here you got 12 11.25 12.7 2022 at 38 down to, and is Walgreens a good stock? And now we're not allowed to obviously print. I'm going to give you basically a version of what Value Line says too, which I don't think there's nothing wrong with that. We're just offering their opinion, and I don't think there's nothing wrong with that. So Walgreens has a timeless line of 3. Their projection, though, over the next 3 to 5 years is 25 to 40 that the stock could. And then for risk-tolerant investors, this stock offers attractive long-term upside potential. The full year, and it has a dividend of almost 6.6%. Now, this stock back in 2022 made $5, and this year we're projected to make $3.20, and also next year about $3.20. So no growth at all. How the hell, though? Think about this. You got a company, even with this year, should do about $144 billion in sales, and the market cap on this stock is $13 billion. Now, I looked into this stock several times, and we've bought and sold it. I'm pretty sure, again, it's in one of the, I have to double check, but I think there's a small position. We're pulling up Yahoo. We want to see what the debt is, and the debt is big. It says 9.5 billion. Value Line. Let me see. 9.5 billion. Financials. Yeah, let me see the statistics. And I was listening to another discussion talking about Walgreens a couple weeks back, and which I didn't know. Yeah, it has a PE of like 5 or 6. That means it trades at base. It has no growth pretty much. So it trades at, 1 times book. It revenue, yeah, 140, is that right? Yeah, 144 billion. So that's accurate. Total cash, very low on cash, $676 million, with the debt being $34 billion. With that being said, though, what I discovered, something about the debt being $34 billion, from what I understand, that the way they classify the debt is about $21 billion of the debt is basically lease obligations. So, in other words, those are commitments that they have for a lot of the stores they don't own. A real estate holding company owns them, and that happens a lot with these companies. Everybody thinks that, now it allows them to basically close stores easier and walk away with, owning less money if they walk away. A lot of times with those type of situations, they can get out of their lease, but they may have to pay 2 years. Straight up to the landlord. So even if the landlord, it's sort of a get out clause that even if the landlord does find someone in a year, it don't matter. Now, sometimes some of these companies can find somebody else and sell their lease, and someone could take over and make money that way. And it all depends how the lease is written with the company that they are. But there are many situations. The reason I know this because I used to be a Subway franchise owner, and I follow some of this and how these things work as far as leases and stuff like that. So something like out of that 34 billion, 21 billion is the lease obligations. So that to me is not, now it's still about $13 billion and the cash, but they're probably, I wouldn't be surprised if they cut the dividend, because it is a lot, and the dividend right now is 6.6. So what is that dividend? What do they have to pay for that? Trailing, yeah, $1.69. So at $1.69, yeah, the ratio is roughly about 55% of their earnings are going to pay the dividend. The only thing that every time a dividend gets cut, it always seems like the stock drops even more. But oh my God, how much more can it drop? Now, with that being said, you see it all the time. Look at Rite Aid. But Rite Aid got themselves in trouble, and Walgreens even bought out a couple Rite Aids and closed them up. Walgreens is a nice store, but you know, I make a living buying and selling liquidation pallets, and I've seen a lot of liquidation Walgreens pallets. Basically, them selling off $10,000 worth of inventory for like $1,000, 10 cents on the dollar, and they're losing money a lot by that because the stuff is not even marked up that much. So that will subside probably by the end of this year if they're not closing more stocks, but or stores, excuse me. But it is a problem. It was a problem for Target, and Target adjusted, and these stores wanting to carry too many SKUs is a big problem. So the 50-day moving average is 1716. So we're even down from there. I know that we just recently added some of the stock because I'm like, wow, watching the stock drop from basically 1857 down to 1481. We bought some even in at 15, but I think our average is closer to 19. This will be actually sometimes I may buy 100 shares and it jumps 2 or 3 points and you're talking about a 20% move and cash out. But where is Walgreens going to be in the next 2 or 3 years? I'm surprised a big hedge fund company hasn't bought the company and really tried to really change things around to I mean, how the hell do you do 144 billion now? So at 144 billion, their profit margin right now is a negative. So at 144 billion, and they're making, how many shares are outstanding? Yeah, it says it makes $2.2 billion approximately. $2 billion now, but they have the write-off. CEO there, yeah, and right, so far Walgreens will pay down from selling the majority of the company expects to achieve over $1 billion in cost savings per year, cutting back employees, reducing headquarters, and reducing non-essential spend. And is looking to sell its UK boot segment. Yeah, so basically, flat growth. Says the company's financial strength is with value line is B++, and but I don't know. For me, I would love to pick up shares at 15, and it's going to be tough though. It might be a stock that in the $15 range, 15 to 18, 15 to 18, 15 to 18 for a while, because really long term, we're not good. Our 200-day moving average is 2093. So we're going to run into resistance at 1716. And what is going to get that stock really jumping? Again, now this is not a recommendation to buy the stock. It's a stock that I personally, someone in the family owns, and that we've dealt, and we all know Walgreens. And these are situations I like to point out, and I use the value line. And these are things to think of, and I welcome feedback. I want you guys to tell me what you think. The companies that fall in this category is CVS. It falls under medical services. You know, CVS actually has a better rating. CVS is on page 203. 203. And the thing is, you know, I've had to learn sometimes the hard way. You know, Charles Schwab used to say, buy stocks that you know and love, or, you know, basically know. And that's not the case anymore. You know, the competition out there in a lot of things, and there's just so much going on with like Amazon. People don't go to the stores much; they buy things online. Healthcare with insurance and things like that. You know, CVS is trading at it has a stronger rating, and wow, CVS does about $368 billion. So market cap is 72 billion. Wow, I mean much bigger than. So basically, you're talking 5 times bigger market cap, than Walgreens. So Walgreens is not something. Walgreens is, I think, is going to be sometimes a good trade, but it's going to be tough. Again, I wish a hedge fund would step in and could fix some of these companies. I knew Walgreens that built a store in. I live in Pennsylvania, in the Scranton market. A couple of years ago, they tore down a bowling alley. They tore down a guy's beer distributor, rebuilt it for him, and wanted the exposure on the corner next to a giant supermarket. And it's now a Family Dollar store. So they probably lasted, I don't know, 5 years. Someone obviously watched this video and Eric could correct me and say, oh no, it was there only 4, or there it was 6, but it was approximately 5 years. But tell me what you guys think. I do want to do a value line highlight, so I think that's what we're going to make this video title. And I hope you like that video, and I am definitely making more content. I do plan to even go live in the future and discuss stocks. And I hope you enjoy this video. Don't need to pay some high financial. Do some research yourself and watch videos like this. Look at Twitter. Look at Yahoo. I look at a lot of different, trying to do my homework. And my goal is always to get a 30% return per year. And that's been pretty accurate. Anytime I dabble in one of the accounts and options, that's when it screws up. You could have temporary returns of 150%, and then, and then lose your shirt when you do good on one, and 3 or 4 others do terrible. So, when 401ks that you just can't take those risks on that. And 30% return is good because basically you double your money every 2.5 years. All right, give me thumbs up and comment below.